Hello guys, and welcome to episode 2 of the £100 account challenge. Now, if you are just joining us, I would recommend that you watch episode 1 to give you a little bit more context as to what we're doing here. But basically, I'm starting with a £100 account and seeing how much progress I can make using correct risk management guidelines and a very conservative trading strategy. This is not like a crazy account flip or trying to run it into the millions. I'm just showing you what you can expect as realistic results with a very conservative trading strategy. Now, so far we have made 12% on the account with 4% risk per trade. Now, 4% risk is a little high. I would definitely recommend that you trade between 1 and 2% risk. However, as this is a challenge, I am stepping that risk up just a tiny little bit. So with that being said, let's get on with the video. Okay guys, so it's now actually Tuesday, the following week from the video from episode 1, right? I have not placed anything on the account since you last saw, and I'll just show you that here. Let's see if I can get it to focus. So that's obviously the account history. You can see there's been absolutely nothing placed. Yeah, there's account history there. Nothing has been placed, and then you can see the balance is still 112, right? So pretty much nothing in the markets for me yesterday. The markets were very, very slow. It was Labor Day in the States, so that was to be expected. And then coming into this morning, I had an idea of quite a few trades that I wanted to take. Unfortunately, the markets, after a really slow day like that, you can start to formulate some trade ideas, and then when the momentum picks up, often things can just run, right? You're waiting for a pullback on a pair, and it just continues to run and run. But anyway, the reason I'm checking in with you, even though it's like 5 p.m. and we're getting ready to head home now, the reason I'm checking in with you is because I have actually taken or placed a couple of orders in the market. So I'm going to give you a quick run through of them, just because I'm conscious that they may actually fill overnight, they may get activated, and then I have to come in the morning and explain to you why I didn't tell you about them. So I'm going to give you a quick breakdown of the 2 orders that I have in the market, and then after that I'll probably catch up with you tomorrow if they have filled. Okay, good morning guys. It is Wednesday the 9th of September. Now, yesterday I filmed the intro to this video, and I also filmed an analysis breakdown of an order I had in the market on Euro Yen, and also one I had on cable. Now, unfortunately, when I filmed that analysis breakdown, the mic wasn't plugged in, and so there was no audio. But overnight, effectively I woke up this morning and both of those orders have hit target without actually activating the order. So I wasn't in the trade, they've ran straight to target, and subsequently I have just pulled both of those orders. Okay guys, so it's around about 3:30 now. I have actually had an order in on AUDUSD, which is now being filled. So I've just updated my journal, and now I'm going to give you a breakdown of that trade and why we're actually in it. So looking at this weekly time frame here on AUDUSD, you can see this red level that we've got in here comprises some support or some resistance back here, support, 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 resistance. And then in the previous week when we've come up into it, which I'm going to zoom in on now, when we've come up into it, you can see price has actually rejected that level there, and the weekly candle closed back below this weekly swing high to the left there, right? So the information that that's kind of given me is that prices tried for higher prices. The market's tried for higher prices. It's actually failed up there, and then it's got acceptance at lower prices, kind of leading me to believe that we might back off of that high just a little bit. So dropping down onto the daily time frame here, you can see price has obviously closed on Friday as a bullish hammer. The candle in itself may seem relatively bullish. You may think, why are you shorting that? But the candle is actually, it shows that the buyers have pushed up into that level from below, which is the swing high to the left on the weekly, and failed there as well, right? They've not actually managed to get past it. If we track forward one day, again, we see, the market participants fail to get price to accept above that level again. And then yesterday, we actually have a bearish engulfing candle off of that level completely. So with that in mind, as I come into this morning's session, I'm looking for entries to get short, right? I'm not looking for a huge target here, but I'm looking for short entries, right? So I can instantly see a trend line, 2-touch trend line coming in along the top there. I can also see a level of structure in here. You know, if I zoom out there, you can see that that's obviously resistance back there to the left, resistance, support, support, support. We would expect that to hold as resistance when we get back up there, right? As price tracks forward a little bit into this morning's session, I put on a fib in here like this, and you can see straight away we're starting to get some confluence around that level as well, right? If I take a zone, I have a zone now in here, and I actually put a pending order in smack bang on that low there. I'm going to make that a little bit thicker so you can see it, and make that dash line. So pending order goes in there for me. I can delete that fib because I don't need it anymore. And really the area I'd like to target on this trade is going to be this low down here, right? Just the most recent low that the market has made. Now, as we see the market start to trade up, we get a fill on that order, and we actually back off of it a little bit, starts to go into profit, and now you can see prices pushing up and is actually trying for that trend line. Now, with regards to stop placement on this trade, my stop placement is just above that level there, and my target is of course that low for a nice 1 to 2.5. So, you know, could be a relatively nice trade here. I've overlaid a screen recording of me actually putting this order in the market previously. And just to give you an update on USD CAD as well, let's see if I can get USD CAD up. You can see USD CAD is now interacting with that higher time frame level that we spoke about earlier, and my order is obviously in just below that level. So currently on USD CAD, we're about 20 pips away from activating that order. Should I see bullish price action at this level, I may just market execute. But anyway guys, I'll leave you for just now. I'll update you if AUDUSD actually stops out, or if we get a fill on USD CAD, or if I end up executing that market. Okay, so just checking in very quickly to give you an update, as I am actually actively managing this trade on AUDUSD. Now, you should be able to see my screen now. Price has put in this shooting star off of the level that I was actually selling from initially. So I'm simply moving my stop down to just above the head of this shooting star. So it's, you know, it's taking about 1.5% risk off the table. Remember, I am doing between 4 and 5% risk on this account. So this is just bringing that down to about 3%. This is something that we teach in our course, you know, trailing stops and actively managing trades relatively aggressively, especially when you are trading counter trend. You know, the overall higher time frame trend is still bullish, so we do want to be a little bit more aggressive. If the market can mean revert in our favor and start to show bearish price action, we really want to be a little bit more aggressive, because the higher time frame bias obviously does prevail. So again, I'll update you if anything happens on this trade. Okay guys, it is now Thursday. I showed you the last clip you would have seen. I actually trailed my stop there on AUDUSD. I did get stopped out for minus 3.2%. So first loss on the account, again, I'll see if we can get it to focus. First loss on the account, we're actually down 3.2% from last video. So overall, we're still up nearly 9% on the account. I think this kind of shows the, you know, applying decent risk reward and really maximizing those winners. On that AUDUSD that I won last week, I had 2 positions. I managed to squeeze 12% out of that trade. So losing 3% on a trade like I did just yesterday really isn't a big deal. Now, I do still have quite a few positions that I'm actually looking to get into over the course of today. So I'll be sure to update you if we do actually get into any of those. Bear in mind, it is now Thursday, and you know, the week is drawing to a close. So potentially, you know, if I don't get a setup by sort of late afternoon today, it may be unlikely that I'll actually get anything closed by the end of the week before this video has to go out. So unfortunately, this video may have to be one where I'm losing a little bit of percentage on the account. But you know, the main thing is taking 3 steps forward, 1 step back, right? And that's what you want to be doing in your trading. We can't have this attitude of you're going to be winning every single trade. You can be profitable with even a 30% strike rate. Now so far on this account we obviously have a 50% strike rate, we've won one, we've lost one, and we're still significantly in profit. So let's keep up that, let's maintain that risk to reward and that expectancy, and let's see where we can take this account before the end of the week. So that's all from me for just now, guys. I'll catch up with you in a bit if we do get involved in any trades. Okay guys, so just checking in to give you a little update. I have actually entered a trade on Eurodollar now off the back of the ECB news that has just come out about an hour and a half ago. So I'm going to jump around onto the screens and give you a quick breakdown of that trade and why we're in it. So starting off here on my left screen, I'm actually showing you MetaTrader 5 to show you that this trade has indeed been executed. If I just bring your attention down to the left hand side, you can see that balance does reflect the previous balance that we spoke about at around 9% profit there in total on the account. And again, this is that live Admiral Markets MT5 account that I have been using, right? So next I'm going to take you over onto a clean chart of Eurodollar and actually break down my thinking behind this trade. Now, what I'm going to first do is use this replay tool and delete the past few hours of price action to put you where I was in terms of the markets when I started to frame this trade idea. Now, you can see for a little while here, we have been making very, very little progress in Eurodollar, right? We are effectively in a sideways range, and some people, if you look at candle closes to be new highs and new lows, then you may say, okay, we're not actually in a range. I want to see price close beyond these highs before I believe we're actually up and out of that range, and likewise I'd like to see price close below those lows. So we can see that price is struggling. We've encountered the bottom of the range in the past couple of days, but what we have waiting above market is something that's quite interesting. We have the low of this shooting star candle. We know that on the way back up, price can often react from these levels. It doesn't mean that we just steam in, short from these kind of levels. We do want added confluence there. Now, if I was just to extend that line out to the left, you'd see that we do actually have resistance to the left there. And if I go all the way over onto the chart, onto the left hand side, you'll see more support and resistance along this area, right? So you'll see that is actually a decent level. Dropping down onto this H1 time frame, which is the time frame I put my order in on. What I do is I'll take a fib from this swing high here to the sort of deep swing low, and you can see we have a 50% fib in there. What I'm going to do is I'm going to blank out all these fib levels apart from the 50%, just to keep my chart nice and tidy there. Then just above the fib level and in between the fib level and that shooting star low, you can see we do have a point of structure there on this 1 hour. You can see it comprises these two lows here, which have yet to be tested from the underside. Comprises this low here, this high, a little bit of resistance there. You can see we've tested it there after the break. Support, resistance, 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 and so on, right? So that's a very big level in the Eurodollar for me, and therefore I was willing to get an order in bang on that level. Now let's talk about stop placement. Well, above market, the area that draws my eye is right in here. Again, you can see a point that has been resistance, support, resistance. So flipping it, so roll between support and resistance, to my mind that says that that's a decent level. So I'm happy to put my stop just beyond that, around 42, 43 pips there. And I'm not looking to take this into new lows or anything like that, especially since we're coming into the end of the week. So my target falls in just at this prior low. Now, as price tracks forward on ECB news, we get a fill and price backs away from that level, showing some initial rejection. In the next candle, we attempt for higher and fail to close at a new high. We actually close within the range of the candle previous, and now you can see the volume is dropping off slightly, which is to be expected after such powerful high impact news. You expect a spike in volume, and then as the market participants start to step back, things start to cool off later into the afternoon. later into the New York, we start to see a drop off in volatility. So hopefully, you know, into this evening and through the Asia, you know, we'll maybe see price track sideways a little bit, put in some structure, and then hopefully we can see price break lower down towards our target tomorrow. Okay, so it's just gone 4 p.m. We've had a nice H1 bearish wide ranging candle close straight down through our sell level. So that stop is getting trailed from 3.7% down to the high of that candle, which is around 1.4%. Target still stands at 10.7%. So risk reward is actually increased on this trade now. Want to keep that risk reward good as we move through the trade. That's the idea behind trailing the stop. Minimize losses where possible. Okay, so it's just gone 3 p.m. It's Friday, so last day of the week, so I'm being very aggressive with this management. I'm moving this stop down to the high of the most recent H1 candle to lock in 2.5%. And then over here on my personal account, I'm actually doing the exact same move to lock in, I believe, around £500-600, something like that. Yeah. Okay guys, so that's just about going to wrap up episode 2. Definitely not the most exciting episode. The markets have been a little bit slow this week, very rangy, very choppy, and a lot of conflicting news and stuff like that coming out as well, making the trades that we were in a little bit more difficult than normal. Now, throughout this week, we took a 3.2% loss on AUDUSD, and then this afternoon I managed to completely recover that and make just a little bit of extra profit there on euro dollar, which I closed for around 4.5%. Now, the reason I closed euro dollar is because it's now after 4 on a Friday. We tend to head home around 5, half 5, and I don't like to hold things into the weekend. Remember, the idea behind this account was to copy what I'm doing on my main account that I trade for income and copy it over onto a smaller account and see what kind of progress I can make. And therefore, I'm closing out of positions on my main account, so I have to do it on the challenge account as well. Not only that, but I also want to be able to give you an update on a Friday to show you how the account is actually looking, rather than saying I'm holding positions into next week. Now, something that I have actually noticed is, from a psychological point of view, trading this smaller pot of money is actually very, very difficult, right? Typically on my personal account, if I have to close a trade early or trail a stop loss or whatever, the amounts of money that I'm going to end up making if I close early or hit a trailed stop is, you know, it's a decent amount of money, so it never really psychologically bothers me. Whereas on this £100 account, you know, if I have to close early or trail a stop or whatever, I'm securing like £1 or £2. So that is kind of messing with my head a little bit, and I can see how that might be a problem for somebody actually trying to scale a small account. At the outset, and something that I have noticed with a lot of our members who try and start with smaller accounts, is from a psychological point of view, they try to run trades for far too long and always ends up with those trades actually becoming losers, right? They're maybe in a trade, they're holding it for, you know, 100 pips and it's up like 10 or 20 pounds, and they just think that's absolutely tiny. They try and run it for longer and it ends up reversing and becoming a break even or a loser. So, you know, there's a little psychological note that I'm already starting to notice. But that's all for this week, guys. If you did enjoy it, please drop it a like and consider subscribing as well. And I'll catch you next week.